I think the market's reading two things. One is that, Iran has said, this is, our kind of retaliation. We're kind of done. If the US is done, we're not going to do any more. So I think the hope now is that, tensions ease and President Trump doesn't take the next step. What the next step is what? To escalate everything. So that would be obviously something the market's not factoring in. But let's just take the worst, a little bit more of the worst case situation that oil prices spiked, say, towards 80. Now that hurts the world economy, not just India. Anyway, growth is pretty fragile. But if you think about higher oil prices, which will mean obviously higher inflation, which will mean that input costs will go up, and therefore the consumer will obviously stop spending as much, which means that's the last leg for the US in terms of the consumers really held the growth there. So I think President Trump's thinking about the economy, and he wants to always project a strong economy and a strong market. Then maybe he won't take the next step, and then we go back to the scenario of oil prices falling because really demand is not there at this present time. And growth will slowly pick up globally, and that will be good for emerging markets. So that's the kind of base case. He said he's going to take action or make a statement tomorrow morning, so tonight our time. Let's see what that is. But the markets at the moment have recovered, and hopefully there's not been too much damage in Iraq in terms of the army base. Therefore, the retaliation will be less severe. Maybe it's just more of a war of words now.
What have you made? What has been your assessment of what has been happening? I mean, the day before yesterday, you saw the big collapse in equity markets, the initial knee-jerk reaction to what Donald Trump did, and then a retaliation from Iran. So we did see that escalation taking place. Do you see this worsening?
Well, I think the Iranians, of course, have no choice. They must retaliate. Otherwise, they will be seen as too weak in the eyes of their own people. In addition, I believe that they still believe that by threats they are able to cower the Western powers. That policy that they've followed up to now will not change, I don't believe. So therefore, we can expect further turmoil globally. But you must remember that investors generally are taking this in stride because this is not new. We've had the situation going on for quite some time now. So I believe that after the initial shock, then people will begin to quiet down and begin to realize that it's more of the same. However, the big question mark, of course, is oil prices. As you know, oil has already surpassed the $70 level. And if it goes higher, then, of course, countries like India, who are importers of oil, will be affected. So this is something we must consider. I don't think the effect will be dramatic, but let's say if it goes up to $80 a barrel, then, the consequences will be felt.
The response from Iran shows that while the markets may yesterday have wanted to believe that any responses will be measured, and they well could be, but there is a bit of an uncertainty right now with which people will approach the trading day today or the next few days.
Well, I mean, you're right. I think the markets are approaching this with uncertainty. We've had a very good run, of course, towards the end of last year, and most markets look as if they're pretty well priced to perfection. And then this event comes in and maybe upsets the apple cart. But I think you're absolutely right. I think it's far too early to see this as being, some kind of trigger for a big fall. Because, of course, it's quite likely that Iran is going to retaliate, and it has done already. But these are relatively small things. They're not likely to affect global economies. It is possible that Iran may decide to do a major strike against a major Western country, but I think that too will be a step too far. I think we've got to realize exactly that Iran does know its own position and will not move too far out of that, whatever happens. So I think this is an area of geopolitical uncertainty, but by the same token, we should not get overstressed by it.
Interesting you say that. Now, my question to you, therefore, Richard, would be that let's assume that Iran knows its position and doesn't go too much out of its position. But now that they have retaliated, would the markets now be on tenterhooks thinking what will Donald Trump tweet or do? And can that have the near-term uncertainty? And then I'll come to, of course, crude as well. But first, Donald Trump and the U.S. response.
Yeah, I think, I mean, this is the thing, you know, we all hold out for Trump's tweets. We all react to Trump's tweets, and then 2 days later we find they're completely wrong, or he's withdrawn his views or something like that. So it is tempting to get sucked into it, but it's also important to realize that, you know, they're maybe not as significant as we think. It really depends. If the U.S. decide to go and they sort of feel that these missile attacks have been major retaliation and they want to go in and retaliate again, then I think they'll be more serious. But I rather suspect that at this stage, cooler heads will prevail. The Americans were going after a surgical strike against a military opponent in a third-party country. I think that it would take a lot more from them to seek to retaliate elsewhere, and especially directly into Iran.
Would the commodity markets be as sanguine as well? I know crude reacted very sharply, then has just about been a bit more tempered. We're not seeing levels of 72, 73 as of now. It's still at around 70. So there has not been a dramatic reaction to the events by Iran yesterday. But would the markets would the new range for crude, because of this uncertainty, despite what you say that there will be cooler heads prevailing, but would the markets believe that, and would crude stay tempered, or do you think there's a possibility of a flare up in crude prices?
Well, I think the thing is with crude is that it is tempered by the shale drillers, especially in the U.S. You know, new forms of getting oil out of the ground means that it's cheaper, and that will probably keep a lid on oil prices. You know, there is supply out there. The economies aren't demanding a huge amount of oil at the moment. So I do think that price will be somewhat limited unless we have major disruptions as a result of this. And at the moment, it looks as if that's maybe not likely to happen. More importantly is gold. I know you were talking about gold a few moments ago. And I think that's a very interesting move because we've seen gold move upwards quite sharply. Despite the dollar not weakening particularly, so gold in US dollar prices is now quite strong. Gold in other foreign currencies, if you look over the last year or so, has actually done extremely well. In fact, it's an all-time high against most of the other major currencies, against the crosses. So I think gold is interesting, but it's difficult to know what gold is telling us at the moment because most other asset prices are high as